Hi, and welcome to another daily recap. This is day 83 and it's August 21, 2024. Today I created all the three pairs in EU, and XAU. And to summarize it, in EU I got a loss, and in GU and XAU they were no breaks. In XAU I had a dummy trade, like a trade that doesn't meet my strategy, but still my intuition said that it would play out. So I didn't actually take the trade in 85. I just traded using trading. Uh, it was a paper trade. Nevertheless, that ended up being a winner. And GU didn't give me any opportunity, and EU gave me an opportunity, and it was a win. So that loss was that I took actually shots from a bullish market, and it is actually fair deal. But intuitively, it was very high probability, but technically, it was a little probability trade. And yeah, I just stick to my trade plan. At the end, it was a good losing trade. So there was no news today. There was only one news that is well ahead of my trading window. My trading window ends at 15, and this is at around 9:90, 4 hours after my trading window. That's it. That will cause no issue for me. Without any station, let's check the daily chart of euro dollar. So, euro dollar, the swing structure is bullish, the internal structure is also bullish. This is a strong internal move, and this is the weak internal high is not yet formed because I need to see sufficient pullback to mark the weak internal high. So, for now, price has tapped into this daily supply. What I can expect is either the price can liquidate this pulse and liquidity and then it can push down, or price can just react to the supply and it can start making a fractal pullback and then take out the pulse and liquidity. If you ask me which one the price would go for, I would definitely say the price would go for the buy and liquidity and then come down. So that is C1, which is very real, but it does not mean that price should go up. Sometimes when the masses think that price will target the buy and liquidity, the big institutional players know what the mass players do and they just do the opposite. So we can't judge what the mass players are going to do. All you're going to do is trade the 6 hours of session. So we need the session order flow. So once we get this session order flow, we just stick to that order flow, quickly scalp some profits, and then leave the chart. That's it. Very simple. But we also need to know the macro picture. So jumping into the 4-hour chart, the 4-hour is the daily supply and the swing structure is bullish, internal is also bullish. This is the fractal low, and if we need to take shots, then I need to see fractal breakout structure around it, and then that will give me a strong signal that this fractal structure can continue till the price reaches this demand or this Forex chemical. So for now, what I can do is I can take shots. Again, I can take shots, but till this Forex demand only. So if the price reaches this 4-hour demand, then there is a huge chance that the price can respect this 4-hour demand, push up and take out the buy side liquidity up. So longs we can play expecting the price to take the buy side liquidity, and shorts we can also play expecting the price to make a 4-hour internal pullback. So both are valid. This is 1 hour. 1 hour is structure is bullish. Internal is also bullish. So this is the strong internal move that's liquidity and form the PY. And here we see another PY right here. And this is really low probability PY. And there, if this PY fails, this is one more PY here. So this becomes a low resistance liquidity for the price to just slide through. So I was expecting this. I was actually targeting this low resistance liquidity, and I took the shots today. So for bullish, the price needs to take out this this high. If this high is taken, then I for sure I can know that this weak internal high could be taken out. So if by chance I get any trading opportunity, if the price pulls back, I'll not hesitate to take the longs from this PY targeting this buy side. So this is the zoom version just for your convenience. So during session at 8:20, price took the Asian low, respected this PY and made a chop bullish, which makes this as a high probability setup because it expects liquidity chop bullish and it also respected this PY. So I can look to trade from this freshly formed PY. Either I can take risk entry or I can look for M15 confirmation entry or M15 led something, and I can look for trade. Initially, I thought of playing the M15 risk entry. Risk entry, then I later realized that okay, I need to go for further confirmations because this H1 risk entry is not in my trading plan. I just included right just before analyzing it. So it is an additional rule that is coming into my constitution during the trade, during decision making process. So I just ignore this rule. So you can have a look at these conditions, phase A2 conditions, price not reacting after high time frame POI. Actually, this box should not be ticked because price is reacting off from daily supply. This price is still in daily supply. So taking longs is a bit of no problem. In line with medium time frame order flow, yeah, it is in line with the medium time frame order flow, and it has a score of 4/8. Yeah. It has liquidity, it has displacement, where a shift in the order flow, and it is still unmitigated, and it is formed during the London session. So Frankfurt was it was formed during the Frankfurt. So all the criteria met, and not all the criteria, like 5 out of 8 criteria met. So that is enough for me to take a trade because I just need 4 out of. So in the next slide, you can see I have changed the entry method to encryption confirmation. Because why encryption confirmation entry? Because there is no encryption lid here. We can't use CLC1, so I can just go with M15 confirmation entry. If the price comes here and makes a then chalk bullish, I'll trade from this PY to target this daily bar channel. Very simple. But unfortunately, price without the made a chalk bullish, and then it chalk bearish again. So I can see this as a sweep from price with the buy side liquidity and then chalk bullish. This is a bearish sweep zone, and this could be a very high probability because price has swept liquidity and then pushed down. So using this liquidity, price can target this low, which means it can target the low resistance liquidity below also. So this is the PY that with the liquidity. So just mark this one. And these are the phase T criteria. Price tapping into high time frame PY. Yeah, price is still in the daily supply. High time frame PY, score of 4/8. So, the daily demand, the daily supply. But you can also consider this for medium time frame also. You can see medium time frame took liquidity. So liquidity it will not displace anything, but it has made a shift in the order flow and it is unmitigated. It is formed during the kill zone and it has just flipped an order flow. So actually this condition should not be there. 1, 2, 3. Why it didn't put the order block? Because this is the supply, this is the demand, and this is the supply. This supply must overpower this demand, which means the price should be below this demand for this to be a flip zone. This is not a flip zone actually. So 4 out of 8 criteria satisfied, just satisfied. That's it. So it is just eligible for trade. That's it. So trading above the trading with the internal structure above, with the weak internal structure above. There is weak internal high. Price will just go up and take out this weak internal high, and it is against a strong bullish one. So yeah, the overall momentum is bullish. But since I found this low resistance liquidity here, and also the 4 hour is supporting me to take shots to play the internal pullback. So there is support from the high time frame also and with the H1. All I need to get is a box entry model to take the shots. And this is one trade idea that I got while waiting for the price to mitigate my H1 PY. So this is the H1 PY we just marked here. So this was the H1 PY that was initially present here, which I expected to fail. So this is the H1 PY. If you are sticking with if you want to trade in line with the internal order flow and you are not worried about trading against the immediate H1 order flow, when I mean immediate, it is fractal. When you're not worried about the fractal order flow, then you can trade using this POI and target the buy side. And here you go. That is perfect break and then liquidation. So you can enter this candle and you can target the buy side. So actually, I'm not taking this trade because I trade only in line with the fractal order flow, that is H1 fractal order flow. If that H1 fractal order flow is in line with the internal structure, that is perfect high probability. If it is not in line, I find other confluences to trade. In this case, I found there is a ton of low resistance liquidity and the 4 hour needs to fail internal pullback. Those two confluences, with those two confluences, I can take these shots. If you are not confident enough of playing against the internal order flow, then it is fine. You can just skip this one. But you can also play with the internal order flow using this POI. And yeah, the first reason is it is against the immediate MTF order flow. And the second reason is it does not satisfy 4 out of 8 criteria for of the POI criteria. So I have a very low confidence in this POI and this trade idea being played out. So I just didn't take this trade. Rather, I just stuck with my original shorts idea, playing before on the card. So at 9:57, the London session was ended. So I just left it as waiting for, all I can do is wait for input confirmation entry and then I can play the trade. Or if there is a chance, the input in LC2 models can also play out. See, but yeah, um, but still one risk factor is always holding is that this demand did not fail. This demand did not fail, and one more thing is this demand did not form during. It was formed during the spread hours. Low probability, and I wanted this POI to fail for my trade idea to work out, and I had all the consequences for this POI to get failed. This is one. Yeah, and when I jumped when the New York started, I had a perfect basic win within a tight range. I just couldn't imagine how I just got it, but yeah, it just happened. LC2A within a tight range, perfect. I can just trade. This was the 11:45 candle, and this was the 12 a.m. candle. This was the start of the New York session, and unfortunately, immediately after the start of New York, price just rallied down again, and and it also dropped bearish in the input field. So LC2A stock balance, multiple lower time frame confirmations are lining up, and this is also lower time low probability POI. It's already told you why it can fail. So what will you think? Just your mind just think of shorts, even if it's a market execution, those shorts. Because once this POI fails, there is a low risk security below. You can easily target 3 to 4 hours. Like that's the thing that was running in my mind again and again. But this POI didn't fail. You see, now that I have everything confirmation entry, I look to enter on the DPR. This is a balanced price range if you don't know. Both the bullish Xau Recap and the bearish Xau Recap in the called DPR. It's a very strong area of attack magnet. It's a price can respect and it's strong. I still have that one risk factor. So demand is still holding. But since the price mitigated the H1 demand multiple times, it is most likely to fail. So this is one theory. I just have a few minutes to explain this theory. Like if the price mitigates, like the demand is the one which has kind of buy orders, if the price can fill those buy orders and then it will push up. But when this price mitigated this demand, it pushed up filling some buy orders, but it was not able to break this price. So again, price came down, filled some more buy orders and pushed up. So again, the price comes down, which means the amount of the buy orders from this demand is not enough to overpower the supply. Simply say supply is overpowering the demand. So that's why I say when the demand is mitigated multiple times, it has a chance to fail. But one more dangerous thing is what we're going yeah. And then I saw this bullish thing, bearish, bullish thing. So this chart was actually a liquidity line. I thought like that, fine, because a liquidity line could be just a big break and then the price would go up. But this closed below. So this gave me confidence that okay, this is not actually a big break. This could be the real chop bearish. This S&P divergence was simply because to facilitate the price to move up to tap into this TPR to fill this imbalance. So this is what I concluded, and I didn't cancel my trade. I just kept it open for the price to come and tag me and then push down. And this is how the S&P divergence looks like. It is bullish. You can see the difference here. This is DXY and this is Euro. And the DXY just held itself up and it pushed up and took my stop loss. So once actually I kept my stop loss just above the BPR. So once this BPR failed, I immediately canceled the order because BPR is the last thing that was holding. But I just don't want to lose it. I lose the entire against the lot. Just cancel and I just lost. Instead of 25, I just lost something. Yeah, it was 0.65. Anyway, That one fear I had, that is this demand is holding, this demand is holding, that was the fear I had from the beginning of placing this trade. That fear just held up, declared itself this demand, showed what it is made up of, and it pushed the price up, taking both the profits. So there were a ton of confluences for me to take trade. They were uh, both sell side confluences as well as buy side confluences, as well as inverse return confluences. But the only one risk factor is that this demand didn't be, this demand was not overpowered, and the demand overpowered me. That's the end of this. And later at the day, during the 19 p.m. news, price overpowered this demand, took out all the low resistance liquidity here, and it also took out the low resistance liquidity here, and then price was this was during the news section. So yeah, and it took out the weak and then a high also. Maybe because of the news, price was consolidating and it didn't. I think it reserved all the liquidity pools for the upcoming news. And when the news broke out, it used as a catalyst. The institutions took all the both the vital liquidity as well as initial liquidity. So before the news, price was consolidating, taking the immediate liquidity. The last full of liquidities were taken during the news as a catalyst. Okay, that's it from you. Let's jump into GU and see what the market are coming in GU. I didn't get any trades, as I already mentioned during the GU analysis. So, anyways, I just go through what happened in GU and what I didn't get any trades. This is GU, and GU actually swept the internal high of the daily. So there was some expectation in my mind that the bearish order flow can kick in and price can fill a ton of imbalance, and then there is a possibility of fractal pullback. And by the way, the daily is structure is bullish, internal structure is bearish. So this internal structure itself looks like a swing structure, so I didn't take the entire screenshot. So what I can expect is today I can expect either the price can continue this bullish order flow or the price can just come down to make the daily pullback, which I'm expecting for the past 1 week. So now it has liquidated the daily supply and it did not close above it mainly. Thus I'm expecting the price to close above the weekly internal high. Yeah, that's also one more good point. This is a weak internal high, right? So this is not a strong one to just liquidate it. This is a weak internal high. So I can just expect the price to just go one more candle up to actually close above this internal high. But since there is liquidation, the price could also come down to make a deeper internal pullback to back to the daily demand. That's what I can do is I just jump into low time frames to that. This is the Quora chart. Structure is bullish. The internal structure is also bullish. Strong internal low. Weak internal high is not yet formed, but price took out the just liquidated the weak swing high. So this is a ground liquidity. And then I realized that there is a demand chain that is holding and overpowering this daily supply. So the simple guess is this demand chain can hold and take out the drawn liquidity because price didn't close above the weak swing high. So this drawn liquidity can be taken so that the price can close above this weak swing high, as well as in daily also it can take out the weak internal high, and also to respect this demand chain. So it's very short, in very short answer, this is a demand that I'm expecting the price to hold and then price to push up. If this demand fails, then the price will just continue the internal pullback as expected in the daily. So this is the last level of demand that I'm expecting the price to do. So there is, when I take longs and take a loss from here, I'm very much happy to take a loss because this is the last level of demand. If this fails, then I can expect a deeper internal pullback. So very strong level of demand and very clear drawn liquidity. So longs are very much hypothetical. So H1, the swing structure is bullish, internal is not yet found. Sorry, the swing pullback is not yet found. This is the internal base, the internal structure that I'm dealing with. This is a strong internal low, weak internal high, and the weak internal high coincides with the drawn liquidity. If I zoom in, so high probability this POI is a very high probability because it's swept liquidity and then pushed up rapidly. So this POI also has an inducement, and this is one single leg, and the chop was below here. So this is a very high probability POI, and I can expect the price to mitigate this POI, and then it can push up to take out the ground. Also, if the price taps into the 4-hour demand and then chalk bullish, I am also ready to take that longs with the immediate order flow. Jumping at 9:55, then I realized that this is the actual fractal structure from year to year. So the fractal high coincides with the weak internal high, and this is the fractal low. So inside the fractal structures, there is internal structures as well. So you can see this is the internal chalk here, and one more chalk coming down here, and again price made one more chalk, which means that it is going to make, which means that I can look to follow this internal fractal structure. You can also call it subfractal structures, because since the fractal structure is very large, I can create subfractal structures. I just want to get into the trade, right? I just want to go with the momentum of the day. So I just go with structures, so that I can enter. I can have psychologically, I can have one strong low or strong high, a strong swing point, which I can trust, and trust that it can hold and push the price up, and look for POIs, and then I can trade. And yeah, price actually chalk bullish, not chalk, internally chalk bullish. This subfractal high was got broken, and price stopped up. So this is the POI that I was interested in. So actually price took the liquidity, tapped into the 4-hour supply, 4-hour demand, and then into the chop up. This is a very high probability POI, which the price can respect, and it can push up to take out the drawn liquidity. So here we go. Phase A2 criteria. Price not reacting off from high time frame POI. Yes. Yeah, it is actually, no, it is not actually reacting, because price has invalidated the daily supply. So technically, it is not reacting off from the high time frame POI. So this box is also ticked, 2 boxes are ticked, and medium time frame order flow with the score of at least 4/8. So all these 4 boxes are ticked. So it has swept liquidity, and it has displacement, it has shift in the order flow, and it is unmitigated. And this shift in the order flow is a mild order flow shift, because for me to say that there is a shift in the order flow, there must be at least fractal shift in the order flow. Here it has shifted only the subfractal structure. So for me, it is not a clear fractal shift, but still this structure shift can hold, and price can continue along with this structure, along with this order flow. So 3 boxes are ticked, and the 4th box is also ticked, because we are having a drawn liquidity which is created from the high time frame. So all the boxes are ticked. So sorry, only actually this box you can take or not take, because we just created the daily supply. But let us assume this box is not ticked, and even this box, if you want with this 4/8, we can also untick that, because this shift in the order flow, it is not very clear, right? So 2 boxes are ticked, which means 50% of the. This is the H1 PY that I marked, and also it turned out to be that it has flipped the order block. So you have actually 6 criteria filled, so you cannot untick this box. So 3 out of 4 criteria are satisfied. This means nearly high probability trade. So this is the M15 time frame, and this is the H1 PY. Only thing I can look for is H1 M15 lit or M15 confirmation entry. Anything which aligns itself, I am ready to take the trade. Yeah, price. This was the H1 PY. Price actually tapped into the H1 PY, pushed up, and I could have taken the trade. I was a bit lazy, and then I just show you how I could have taken the trade. Yeah, this is the mission. Yeah, this is the H1 PY that I was just putting the price to tap, and then there was this confirmation entry. So confirmation entry. So actually, I left during. Yeah, I think I left at this point somewhere here. I could have just drawn the fib, and took a trade at 61.8 level. Stop loss checks below, and it could have been easy trade. I didn't take it. It's Nonetheless, it was a good trade, but I didn't actually take it, and left all the profits on the table. So it's what it is. So that's why you must stick with the chart till the end and not skip it. But I had some personal issue and I had to go at this stage. So I just left it and thought price will not come back because already there was this low. This low could act as a strong protected low and price could just respect this POI and but actually it swept liquidity and tapped to 61.81, which is great. Cool. I didn't get the grade and price went with on. That's fine. Okay guys, anyway, uh, let's see. I just remember this mistake and corporate this next time. Anyway, that's it from GU. Just had one missed trade today. See you guys. Let's jump into Xau and see what Xau has. Let's start the analysis of Xau. And in Xau, we want to know identity trades. So let's see why it doesn't get interested. The daily swing structure is bullish, and this is a daily last level of daily demand, which I expect this level, and then again push the price up. And if I want to take the shorts, I can take shorts only if the price made a chalk bearish, and then I can look to follow the supply with the bearish momentum. But also I must be aware that there are unmitigated demands. Even if this chalk bearish, price could react up from this demand and then push the price up. So for me, for now, the analysis is very simple from the daily perspective. There is no supply to the left, and there is this demand is holding, and this is a strong low. So I expect the price to tap into this POI and then push up to take out target this weak factor. Very simple. That's it. So that weak factor high in the daily is the weak internal high in 4 hour time frame. So in the 4 hour, the swing structure is bullish, internal is also bullish. This is the internal structure that I'm currently dealing with. So simple, there is no supply to the left, so there is no point, there is no reaction point, there is no opposing sell orders from which the price can react from. The only choice that is left with me is to take longs, and there is no POI right here, and this is only POI that got tagged in, and now the price is pushing up. And yeah, hopefully the bullish momentum continues, and then price can take out this weak internal high. Since there is no POI, so what I can do is just look for a bullish sweep zone, that is a zone formed immediately at the start of the session, and I can follow the trend and target the weak internal. I'm not trading from a random place, but I'm just looking for a sweep zone, a fresh POI, and from that POI I can look for lower time frame increase and then look to target the weak internal. So this is the H1. The swing structure is bullish. The internal structure is also bullish. Strong internal weak internal high. Price has tapped into the discounts of the discount range of this internal structure, and it has tapped into the H1 POI. But this is what another H1 POI which is still unmitigated. So price can come deep below, but there is no 4-hour POI. The only 4-hour POI is right here. So I can expect the price to just continue this bullish order flow and then go up and take out the weak internal high. Very simple. So this POI can also be mitigated, but it's a rash chance. I look to follow this bullish order flow, but I must be cautious that the price can make a deeper internal pullback before taking out the weak internal high. That's the safe option is to wait for the price to chop bullish before taking the price. So simple. There is this Asian low. Once the price takes the Asian low, I'll wait for the price to chop bullish. Once the price chops bullish, then a fresh POI will be formed. We'll wait for the price to pull back and tap into that POI. Then I can look for lower time frame entries and capture that move towards the weak internal high. So very simple trade. Price can also come down because this is a low resistance liquidity. You can see this is a low resistance liquidity, and price can easily take out this liquidity point, and then it can tap into this POI and then push up. Because this is a last unmitigated POI. The price can use this as an inducement to push down. And this is also previous day's low. So chances are there that the price can push down to this POI. Yeah, there is this POI which made a chop bullish of the price, and this POI could also be traded for a phase D short if you are expecting the price to move further down to tap into this POI. So if your assumption is that if you're so confident that the price can come further down, using this POI as an investment, tapping into this POI, you can take shots from this POI using low tempo confirmations. Actually, price left an equal high, and then it started to push down. But nevertheless, you can still follow this this order flow. So like you can see the price pushed up, pulled back, pushed up, and then it then broke structure. So this is a fractal structure inside a fractal structure. So you can use this as a POI because it's swept liquidity and then pushed down, creating some market imbalance. This could be a very good POI from which the price can tap into, and then it can push down if and only if you are expecting the price to make a deeper internal pullback to this H1 POI. If your intuition is strongly saying that the price can still go down, then you can follow this trade. So this is a trade idea that this is just a trade idea. I didn't execute this trade in the real market condition. So this is the H1 POI that I marked in the previous slide. This is H1 POI, and within that H1 POI, we are having this 15 supply to demand flip. So and it's also having a lift. So high chance that the price can tap into this supply to demand flip, take out this liquidity, and then push down. Chances are there, but it is against my high time frame narrative. So I'm not going to take this step. For me, high time frame narrative and medium time frame order flow is the main key for me. If they are against me, if any one of them is against me, I'll not take the trade. If you just recall the EU, what it is, the higher time frame was slight, okay, the higher time frame was mixed, but the higher time frame I could play the 4-hour internal pullback. Higher time frame was in my side, and also the medium time frame chalk bearish. So medium time frame was in line with the higher time frame narrative. That's why I also confident in that trade. But here you can see what is the high time frame telling me? High time frame is telling me that this PY could hold and the price can push up, taking out the weak internal. And now the medium time frame is, and this is the chalk bearish, and this is the fractal high, this is fractal low. But the medium time frame is still bearish. So immediately while saying this, I decided not to take trades in XAU because it takes time for the fractal structure to chalk bearish and the fractal structure to go bullish. And here is the fractal high, which is similar to the weak internal high. So immediately on seeing this, I decided there will be no trades for me. But since since this fractal structure is very large, I can look for fractal structures I can look for sub-fractal structures within the fractal range, and I can look to follow the medium time frame buyer, the medium time frame direction. If you have any high time frame narrative, for example, the high time frame narrative, you can say that the price can have, this is not a high time frame narrative, this is a medium time frame narrative because there is no POI in 4-hour time frame, but this POI is only seen in H1. So you are narrating a story in H1 and trading in line with the H1. So you can see the difference. When you have a 4-hour narrative and trading in line with the H1, that's different. That's why I didn't take the trade. And but this trade was set up perfectly, and the TLC one played out, and price tapped into supply demand flip, and it played out beautifully, and it might take that was quite fun. So my real trade was a failure. I took a loss on the real trade, and dummy trade I just took a win. So it is what it is. Not only moment in the market is unique, but if your intentions, if your narration plays out, you can end up in a profit. If your narration didn't play out, you can lose. And the thing here is, the sad part is, in GU, my narration played out, but I was not there to take it, because that's why a backtesting session is so different from a live session, because in backtesting, you backtest till the end of the session. But in live, you may be forced to move out of your charts because of some work related or some personal issues. That's why you just missed it. So that happened to me in GU. Anyways, this was a very good session, but I ended up with just one loss. Okay, see you tomorrow, guys, on day 84. And until then, cheers. Bye. Thank you.